the end of the financial year. It's coming up. It's about a couple of weeks away. So preparing for the end of the financial year, I have started seeing all of the YouTube ads, TV ads, billboards saying, end of financial year sale. And I don't know, you've been on an airplane and I've been on a couple of them in the last couple of weeks. Have you seen those big blue billboards of like Coinly, of like, hey, have you invested in crypto? Use Coinly to go and calculate your tax.
I just love that marketers can find any excuse to spend money, right? It doesn't matter if it's end of financial year, like that is they're just very clever people in trying to invoke people to take action.
It's like, I always use them as it's coming towards the end of financial year. Thanks for the reminder, guys. I don't even know if I use that to ever buy any of their products. But this is amongst us, 30th of June, end of the financial year, stepping into the 1st of July. My question to you, Charley, and it's going to be a two-part question. Every single year, do you have the same process that you execute, or does it change depending on the years and depending on what your goals are? And the second one is, share it to us. Like, how are you looking at this going, I'm going to prepare for the end of the financial year? What are you doing?
Yeah, absolutely. I must admit, I had some very, we'll call it challenging experiences with an accountant early on. And basically what happened is I would go and do my tax like every July, right? I'd come in, we'd bring in the financials, or he had them really, it was all done over the cloud. And we'd go through things. And what used to really annoy me is he would come up with suggestions of what could have been done before June 30.
What?
And he was saying it from this idea of like, oh, you could do this year now. And I'm like, it would have taken 5 minutes for you to call me and tell me this in, what we say, like May or June prior.
Yep.
So we could have done things differently. And it really highlighted the idea to me that if you want to do well with your financials, is you absolutely need to be doing things before the year ends, because you can't change the date of transactions.
You cannot.
And it also makes a massive difference to the opportunities that come to you in business and in wealth particularly.
Yep.
So there's some very big challenges. So yes, I absolutely have a process. So I'll run you through a little bit of it here and like some of the intricacies. But one of the things I like to do is when Q2 kicks off in Australia. So that's we have our end of financial year mid-year for anyone that's not from Australia. But like when Q2 ticks off, that's the marker for me that I've got 3 months until end of financial year. So I actually start my end of financial year process then. And the first thing I do is get a tax estimate based on what's happened so far. So I'm like, okay, well, this is the year we've had. If we stay pretty consistent with what we've done so far, what does the tax estimate look like? So really making sure that we've got funds set aside, which of course we do. We set aside funds every month, but making sure that that's accurate. So when it comes time to pay the tax bill, we've got that money already set aside and it's not a surprise.
Yep.
I think that's a huge thing to make sure of. The second thing we look at from there is, depending on our goals, is there anything that may be suited to either making a transaction or not making a transaction in this financial year versus the next one? And I'll give an example here. Let's say I want to buy a new car, right? It's like, well, if I also have the goal of buying an investment property, I may or may not buy that car in that financial year because it's either going to make me look more or less profitable, and that might affect my ability to borrow money when that time comes. Yep. And again, please don't quote me on these. Speak to your accountant and financial advisors and brokers on it, but these are just like big ideas to question with your advisors here. And then the next one I go into with that is also like super contributions.
Yep.
So again, super is a tax deduction, I think is the correct framing in that. So you might have the opportunity to ramp up your super contributions and bring down your tax, which is a fantastic incentive in Australia. And again, I can't speak on super. I'm not qualified to give advice around that either. But I would say that there are certainly things you can do. So that's all my like before stuff I really look at is like, how do I want my financials to look? Are there any purchases we want to make in this year versus next year? How is this going to affect the goals for the following and contributions? And that leads me into where we are right now, which I must say we're fairly on top of. We're all over this year nice and early. And then the other side of that is obviously doing like and this is more like after the June 30 type of area, is where we look at, okay, well, is there any deductions or things that we can claim back, or how do we want to make things look from there?
Yeah. And do you stagger out the meetings that you have with your accountant? So you have an accountant meeting at the start of Q2, which is like 1st of April-ish, and then like another session before the end of the financial year and another one start of next year? Or is this, cool, just send me through a tax estimate, then I'm going to calculate it from here, and then we'll just talk when we're going to submit all this stuff at the start of next financial year.
Yeah, I must admit, a lot of this is done via like email and messages these days.
Yeah, awesome.
I'm less meetings. I will say I have a very good relationship with my accountant. So do you, Anthony. Shout out to Anthony.
Ooh.
So one of the things that's fascinating is because we talk so often, I feel like there's less need for as many meetings as I used to have or formalize.
Yep.
We definitely will have at least one, but we've kind of become good friends along the way as well. So I wouldn't necessarily recommend that this is something everyone does, but I would think at the very least is like you could probably send an email to your accountant and say, hey, this is the list of things I'm looking to understand.
Yep.
Give them the email first so they can do some research and stuff and be prepared, then have a meeting. So at least that's a more productive meeting. That's what's been a good process for me.
Yeah. And so mine's very similar. I'm probably a little bit more delayed in how I approach it. I'm all looking at like the middle of May is when I start sort of pulling everything together, going, cool, what is the tax estimates? I do exactly the same thing around like the structure that I have is the company's in a trust, which means that I can't store the cash in the trust. I always have to distribute it at the end of the year. So I start looking at the distributions of saying, okay, well, how's my wife's salary? How's my salary? Is there any other family members that we can distribute it to? All that, those kind of things to actually say, cool, what is going to be the best use of this? Whilst then also looking over, well, what are we thinking about doing from a macro perspective, like an overall perspective next year? So are we looking to try and increase borrowing power? So in that case, we might increase our income. Are we not looking to acquire any more assets, which means to your point, we might go and push more into superannuation, or we might try and buy an asset or something like that now. And just trying to evaluate all of those things before, obviously, it comes up to the end of the financial year and I've got, oh my gosh, it's 1 week. What am I going to buy? What am I going to buy? But it's interesting talking to other business owners about this because most people seem to be reactive of saying, oh, I'm going to go down to Officeworks and buy a new laptop, or I'm going to go do these things because I've got some cash in a bank account, right? And it's nothing. I've never really done that outside of some maybe things that are like a couple $100. Like, I need a new this, I need a new that. You know what? I'll go and purchase it because it's the end of the financial year. But I've never used that and never used the sales that other companies have had as like an end of financial year strategy. Like, it's not like, oh, what, we're going to go buy new desks and chairs and everything like that. Are we going to like wrap it all up?
I'll tell you what, I've never met anyone who's been wealthy based on trying to make end of tax year purchases. Well, that was their secret. Like in June, what they did is they made all their purchases.
Yeah.
It is nice though that you can get the refund back, right? So if you are going to make a purchase, being able to claim that and get it back quickly is, I think, a really important thing. So like that side of it is nice. But on the other side of it, I will share just a couple of things that if you're a little bit more prepared here, one of the things I've found interesting is that let's say you've got a year where you really want to make your earnings look fantastic. Like, to potentially go to your clients and say, hey, if you want to prepay for the next 6 months of services, we'll give you a 10% discount. Like, you can actually bring forward revenue into a financial year if you wanted to. Or you can potentially push back revenue. Like, there are strategies around this, which I don't think many business owners take advantage of.
Yeah.
And if you're strategically going to sell plant and equipment or property or whatever it is, that can have huge upsides or ramifications as well. And I would make the argument that I think there's not enough high quality conversations going on with business owners and their accountants to plan for this stuff. And you can often end up in a circumstance that could have been better, which was what happened to me many years ago.
Yeah, and you touched on a really interesting point. I was going to actually ask you about how you tactically sort of apply this inside the business as well. So for myself with software companies, like we do a lot of and have a lot of conversations around amortization, which is kind of like your depreciation. And going, okay, well, what's this going to impact? Because we get quite a bit of like government grants for research and development and all of these things, as well as export grants for bringing in cash overseas back into Australia via selling to overseas companies. All of these kind of the way the books look and the way that we depreciate and amortize actually impact our ability to go get other grants as well. And so in our business, we will actually look at a lot of the things that you're talking about to say, is there a invoice that we can charge now? Can we give any incentives for them to, they don't necessarily need to pay it now because we do accruals-based accounting, not cash-based accounting. So how can we go and push out some of these invoices because we might want to do X, Y, and Z in the business to get like a grant. So we might want to have another $1 million worth of revenue in the business this year because it's going to unlock a better export grant or a better R&D grant next year. Is there someone we might recruit this year? Because again, when we go and do a government grant, it actually gives us a little bit when we do it next time. So your point around like services agreements and contracts might not be like a big thing that people are thinking about now. It's actually something that I talk about within sort of one of my businesses at the end of every financial year to say, how can we go and get these re-signs? The interesting thing is that we also do is reforecasting and evaluating previous budgets. So for the previous financial year, what did we think we were going to make in revenue? What did we think we were going to make in profit? And how far off were we? And what does that set in place for next year? Which for us with personal wealth, it might be what assets you're going to buy, what cash flow might you get from your properties or your investments, etc. But from a business perspective, it's okay, cool. Typically revenue, expenses, and net profit. And what are we going to start forecasting for so that we can build something to execute against as well?
Yeah, you bring up even another really interesting point there is like we've largely spoken about this in the idea of like business. But I think if you look at your investments as well, this is huge. So for myself, like I treat my property portfolio like a business, and like you have to pay tax and all the things that come with it. Like if you had a particularly profitable year, maybe this is the year you want to buy a land banking project.
Yep.
Because you've got the revenue to offset it against, noting that could bring down your tax potentially. Or maybe this is the year where you've taken a loss and you actually want to sell something that's been really profitable so you can offset that loss. Like I think they call that tax loss harvesting as well. There's so many unique strategies here, and I again just don't want to tread on the line of financial advice, but I think that a lot of people can take advantage of these in a huge way.
Hey, fellow business owner, if this topic and value-packed short video has resonated with you at all, and you want to dive deeper into being a full stack business owner, check out the full episode by clicking the link on your screen or in the description right now.